Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about why the Trump tariffs could be very good for you if you have a UK property. You see, mortgage rates are set to tumble over the next few weeks and days. I'm going to tell you why exactly that's happening and what kind of rate cuts could you expect. They're quite chunky, so that's good news as well. Now, if you're new around here and you haven't done already, we bring you the latest property news. We talk about investing in property, interest rates, house prices, and much, much more. And I'd like to ask you a real big favour. We're a smidge away from 40,000 subscribers. You'll see around this video, it's less than 100 subscribers we need now. So please do subscribe and hit the bell notification. If you haven't done already, do make sure you do that. And let's get some more views on this video. I think people need to know what's going on. Smash like, tickle like, do something to the like button. That helps with the YouTube algorithm and pushes the video out to more people. And share this video, WhatsApp it, email it, or Facebook message it to someone. I'm sure you know someone that needs to remortgage soon that could benefit from knowing what's going on. So, the Trump trade war, it's crazy. Right now, at the time of recording this, you've got the potential that the tariffs that the USA is putting on China, currently at over 50%, could be going to over 104%, which is absolutely crazy. Now, that's going to impact Americans considerably, and it's going to impact global trade as well. But one of the benefits from this trade war is that swap rates, the rate that you borrow at, because of all the uncertainty, they're dropping, and they're dropping in a big way. So a swap rate is a rate that the bigger banks lend to the bank that we borrow from. So you and I might borrow from HSBC or NatWest or Santander or Barclays or someone like that. They borrow from a bigger bank, and the rate that they borrow at is called the SONIA swap rate. Now, it is kind of linked to the Bank of England, but this gives more indication on a mortgage rate going down than the Bank of England rate. And so with all the uncertainty, what the expectations are is that the Federal Reserve in America and the Bank of England are going to cut rates a lot more times this year than we were expecting even a week ago. This is how quick things can change and how dramatic and impactful this trade war could actually be. So right now, the Bank of England rate sits at 4.5%. We've had a few cuts since last year. The expectation was that at best would get to 4% this year. The new expectation is that this will hit 3.75% this year. So 3 further cuts, 0.25% each time. Now in May, the Bank of England was looking 50-50 at cutting rates even about a week ago, and now it's looking nailed on that in the May meeting that the Bank of England will likely cut. And so what we need to look at then is the SONIA swap rates. And so these rates are the rates that the bigger banks get, as I said, and these are important because these are what set your mortgage rate more than anything else. And so because of that, they've had some monumental drops since the 27th of March. So the 5-year swap rate, so if HSBC borrow money for 5 years on this rate, it was 4.08% on the 27th of March, only a few days ago. Now it's dropped all the way down to 3.64%. That's a big drop. Now, when you look at the best mortgage rates, you'll see that they often are around the same value as the swap rate. And the way they make money on top of that is with fees and stuff like that on top of it. So we've got a big drop that we've had here. So what about the 2-year deal? Well, the 2-year SONIA swap rate has gone from 4.11% down to 3.75%. Now, this gives banks roughly about 0.4% that they could drop. Now, if the market was really busy, say this happened in January, February or March, they were inundated with applications. We saw that. We know that. We talked about that. We had 500,000 transactions in the first quarter of this year. But we know that the predictions are that the next 9 months will only get 500,000 more transactions. So the market is going to slow down. I said this week in a video, I'm talking with the mortgage works at the moment. I'm doing a refinance with them at the moment. And they said exactly the same. They said it's dead now. It's really, really quiet. All of those transactions kept them super busy at the beginning of the year, but now they are very, very quiet. And so what banks would have looked to have done is to cut rates and eat into their margin. But this gives them the opportunity to cut the rate and keep a fairly good margin. And what we're expecting to happen is some sort of price war to kick off in the next few days. I'm really confident, as are every broker around and every economist and every newspaper in the country, that you'll start to see rates come down. Now, they might not go down by 0.4% straight away. You might see some rates going down by 0.25%. But I think you're going to start to see a lot more rates under that 4%, that magic 4%. We've got a few lenders there already. And you might start seeing some good headline rates at 3.75%. These are rates that we weren't expecting until the end of 2025. But this trade war has brought this forward massively, because there is such a chance that the global economy, and especially the UK, could go into a recession. The UK really wasn't looking very great. This is going to cause a slowdown in the UK economy, this trade war. For example, Jaguar Land Rover have stopped selling cars to America right now. So obviously they're going to have some layoffs, and they are really going to slow down with their profits, their turnover and everything. And that's really going to be a difficult situation for them to deal with. But other companies are going to be the same. It really is just the fact at the moment that everyone is waiting and seeing. Is Trump going to put the tariffs up to 100% on China tonight? That's what the talk is. That what he said, if China don't remove their tariffs by midnight tonight, he will increase the tariffs to 104%. Now, if that happens, do China then retaliate and increase the tariffs on the American goods? Does this end? I don't know where this ends, but I do know it's not good. It's not good for businesses. It's not good for global economies. The one person that it is good for is people that need to refinance their debt. And the reason that debt and the rates are coming down is because the outlook, the forecast, the expectations are on recessions all around the world. And so that's why you'll see these rate cuts. Let me know what you think in the comments. If you comment on the trade war, keep it polite. I know Trump is very divisive. Some of you will love him, some of you hate him. Keep it respectful, please, in the comments. Do smash like, do subscribe, do check out all the other content as well on the channel, including this video right here.